All right, we're still through the noise, life, and lies. Hopefully, there won't be too many lies today because we have a pretty serious topic. Insurance. I want to introduce Gavin Collins and Jeb Burke.
What's up, guys? How are y'all?
Welcome to the podcast. We are live on Facebook and YouTube. We'll give it a few minutes later. We kind of jump in here while I set things up. Give me a second. All right. So, business, life, and lies. Tell us a little bit about yourselves. I know you guys are insurance gurus. You specialize in business life insurance. Is that a fair statement?
Yep, all lines, but life insurance is definitely my passion, 100%.
Okay.
I got into insurance industry it's always a good opportunity. And it turned from that to what I like about Farm Bureaus. They did it all, home autos and all, and then life insurance side. And, I really fell in love with the life insurance side because I really saw I could change people's lives. I live by sell yourself and your product will sell itself at that point. Anybody, they can go buy car insurance, home and auto insurance from anybody, but you got to really build that relationship with people, get their trust, and then they'll buy life insurance from you, and that's the one that changes everybody's lives.
Yeah, it's real estate the same way, right? What is the saying? People buy from people they know, like, and trust, right? And we were just talking about this. It's not who you know, it's who knows you in this world, who gets the most attention, right? That's why we do podcasts. That's why we do social media. We want everybody to know us, right? So I agree with that 100%. Let's talk a little bit about your personal lives, how you got to this point in your business, your business structure, what it looks like, and I don't know. Let's start with you, Jeff.
So I started actually I started a small business when I was younger with my dad. It started out as a deal to just kind of pay for my college education, and then it turned into a business that I ultimately stepped into with my dad. After that, the business wasn't booming. It was a weekend type deal where we were doing. It was actually a paintball field, but we were doing business, so I still had to have a job, still had to get out there and make money somehow, on top of that business while we were trying to grow it. So I got into sales. I was in sales doing printing mail type stuff, marketing, wrapping trucks, vehicles, that kind of stuff. And then slowly realized that I didn't really know where I fit in as far as where I wanted to go as far as career goes, but I had this business. Ultimately me and my dad kind of butted heads a little bit too much and decided to get out of that business. But and it was a hobby that turned into a business.
Right.
So ultimately, I found myself looking towards the insurance industry, started with another carrier. Actually, I wasn't with Farm Bureau at that time and got recruited to Farm Bureau. And to be honest, when I came out of college, I was recruited by every insurance agent. But I was like,
Carolina, right?
Yeah. So I never, actually, it was Newberry College.
Okay.
But I never thought I'd go into insurance. I was like, there's no way. Insurance is boring kind of thing. And it's crazy how, 10 years down the road, I enjoyed what I do every day. But I'm not as much on, the property and casualty side. My focus is I work with a life company directly, meeting with business owners, talking through business succession planning, those kinds of things.
Right.
So that plus my hobbies are hunting, fishing, traveling, that kind of stuff. So
yeah.
So everyday life to me is enjoyed by those kind of pleasures. But at the end of the day, this is what I love: just meeting with clients, talking through their businesses, and how I can maybe give them a nugget to take it on.
Yeah. So Gavin has my my policies, and he helped me 2 years ago.
Yep. But what else? Almost 3 years ago now, 2.5
Yeah,
years.
and honestly, I consider you reaching out to me. Usually, you're like, okay, here we go. I sell real estate, right? You're like, here we go, cheesy sales guy. And typically, you can pick up on people's intentions pretty quickly. I always felt comfortable with you. I felt like you saw the potential for me financially, and that I was growing quickly, and that something needed to be in place. You had the solution, and that's just what it felt like for me. That was my experience. Just to give you a little praise there, but and I think it did. And last time you came in for our annual review, I was like, yeah, I have no idea what policies I have, and I still am not sure, right? I just trust you. I'm like, all right, you say this is what you should do. I think you gave me the this is what I do pitch, right? And we do the same thing. And this is going to sound silly, but in pressure washing, so we go to your house and we give you a price for your house wash and your gutter cleaning and maybe notice 4 or 5 other things that you could use. We don't want to sell you just to sell you, right? That's not our policy. That's not our procedure. What we want to do is say, if this were my mom's house, Tommy Mello, that was for you. If this were my mom's house, this is what I would do for her. And that's package B, right? And you give her the price, you discount it, and say, we can do it for this. And so I like the way you approach that sales tactic with me. It's more like, listen, dude, you're starting to make some moves in the financial world. You need to be making the right decisions. And so I feel like you really helped us out a lot. And
Yeah.
and I thought that was an interesting. So tell us a little bit about your personal life while we grab a pen.
Yeah, so I mean, so mine was kind of. I grew up around a small business my entire life. My dad at one point owned his own body shop. My granddad have owned a used car lot my entire life. So I grew up seeing the grind of small businesses. It's very, it's every day is different. Small businesses so I grew up with what hard work was all about. But also, I think when I got into the insurance industry. So I mean, I kind of dabbled around. I had a pretty serious job in a lab one time for about 7 years. It was a swing shift, night shift stuff, and there's more to this. I mean, this can't be what it's all about, So stepped out and jumped in the insurance industry about a year and a half after being back in my family's small business. And I think that's whenever I came on the life insurance side, and then, having somebody like Jeb that I can bring anytime I need for, just good old small business guys that all they're focused on is getting out and growing that business, that grind, everyday grind. And I seen that firsthand, growing up. So I think I'm able to recognize where that was at. So that was one of the things I kind of bought in on the insurance side and just kind of went all in on it. It's changed my life. And that's the way I look at it. Like, I want to jump in and show ways that small business can start preparing themselves to even future generations to change. That's what small businesses are all about.
Right.
And I see my
Breaking
family
generational
raised off of a small business. That's right. So I know that some families aren't as lucky as mine. All my people in my family are still alive that have built that small business, where some businesses, that's not always the case. In the middle of building that small business, something happens to that person. And
Right.
That generational wealth is gone at that point. So that's where I like to help you in that.
So there's so many. This is how this conversation started during our annual review. So I was basically asking you really difficult questions, like tax write-off and liability and incentives for employees, and you're like, "Listen, man, these are really difficult. Like, you had the answers, but you wanted to dive in a little bit deeper,
Right.
and so that's why Jeff's here, and we're going to dive into that a little bit. So that's how that conversation started. And then I said, "Hey, you want to make this a podcast?" And you were like,
Yeah,
maybe. But my audience is business owners, small business owners, grassroots, blue collar guys. And I know I speak for myself. I don't want to speak for them, but certainly it would be implied that insurance is the last thing on our mind, right? Our priority is, how do we keep our guys busy? How do we maximize our efficiency and our profit? How do we build a scalable, replicable business without killing ourselves and getting a divorce in the process, right? So what you don't think about is it's not in the forefront of your mind, because you've got so many different hurdles to climb on a daily basis, is life insurance. And so when you approached me with life insurance, it was like I went, oh, yeah, I need to, we should probably have that conversation. And then you told me what it was going to cost, and I was like, oh man, I should have done this years ago. And I'm sure that's pretty common once you finally get through and they don't feel like it's a sales tactic. They finally feel comfortable with you. That's probably a pretty general response, right?
100%. Yes, all the time. Yeah. Brett, getting that initial, getting somebody to trust you is the hardest thing to do. I mean, you know that. I mean, it's no doubt every job you pull up on, you immediately get out of the truck and it's like, all right, here we go. This is going to be a simple wash, and we clear your house down and get in the truck and leave. It's all about you're going to know immediately once you talk to that person. Okay, this is going to go well. They trust me. Opinions are going to go a little ways. I'm going to be able to not only you're going to get more out of it, but also you're going to be giving them more things that they didn't realize you could do for them. So
I think too, to your point, a lot of folks nowadays have gotten to where they become not as trusting in their insurance companies. I mean, at the end of the day, we're a big box store, you're a small business. You feel like, hey, they're just trying to sell me something. And so I think from that perspective, we kind of get that X on us right off the door. This is another insurance guy that's trying to sell me a bill of goods that I don't really technically have to have. And that's kind of where a good thing about Farm Bureau and our company is all the guys that work there are blue collar type workers. We all have been out there. I've owned a small business. I mean, he's been in the business world with growing up in it. And actually, we try to recruit agents that are actually blue collar type workers because we know that they understand who we're dealing with on a daily basis from a business standpoint. So
to add to that, like to be a contract with Farm Bureau, like manager side on my side, if I was to put you in every night, I think you do really well. At Farm Bureau. If you showed interest, the first thing I would have to do is I would have to send you a test. Do one of those TV tests that people are like, oh God, repetitive questions, how you handle all kinds of situations. Well, we're actually looking for, you can score a 5, and guess what? Those guys, they make it every once in a while, but it's usually those 3s. Those little pack guys that are just simple.
5 is the best.
5 is the best. Yeah, so those 3, there's something about those 3s. Those are usually your blue collar guys.
You got a chip on their shoulder.
They got a little chip on their shoulder. They got a ton of potential, and they just don't exactly know what to do with it because they've been working that job where in a plan or a line or something to that extent where they were born, they were raised. Hey, man, you get a job doing this, making $67,000 a year. You don't ever leave that job. You have good benefits. That's what you do the rest of your life.
Right.
Those are the guys that want more.
Right.
I want more. That's the big off of that.
It's funny because we talk about that all the time because when we meet people, we're like, hey, that's a Farm Bureau guy right there. It's through hunting fishing or something, or a guy
I have a theory on this.
Likes to work hard, and that's just kind of our role is to be able to relate to people at the end of the day, and the people that we want to do businesses with, smaller business owners. And so if we have the same like-minded people, at the end of the day, it's going to click. We're not going to feel like that big box store. You don't see like commercials all over the TV. You don't see that bigger box of, hey, we're trying to hit a network of a national scale. Right. We're small but mighty, but at the same time, we're still your local, everyday guys that are just trying to make it in life, just like you guys are.
Yeah. So there's our first short. Short. Yeah. We'll be dropping that for sure. Man, this is already a conversation. I just want to make sure that we're incredibly intentional for anybody that's a business owner that's watching this. Intentional. Where is it? Right. There you go. Live intentional.
Right in the middle.
Yeah. So my initial concern as a business owner is, okay, how do I help my staff by offering them incentives like life insurance? Because we're hiring pressure washers, we're hiring, you would call them lower barrel technicians, right? But these guys are high value, and I'm trying to figure out ways to make sure that I incentivize them to stick around. And one of the questions I had for you in our meeting was, can I have a policy that I contribute to that is a write-off? And then that's when this whole conversation started. So let's have a discussion about that. We already started a little bit earlier, but should have been recording it.
So I'll go ahead and kind of tell you this, and everybody if you own a business, you're going through this. We're going through it. Every company out there is going through it. We call it war on talent, right? How do you keep good talent? At the end of the day, what does it take to continue to hold on to those successful employees that are getting recruited by other entities that are doing the same business as you're doing?
Other industries.
In industries as well.
Like you guys.
Because we know we see hard work, and we know we can coach.
Stay out of my shop.
Yeah.
And so there that we call it the war on talent. But again, you got to start getting creative. It's not just about money nowadays. Everything it's about what feels good. You got to think about it. You go in any store, what's the experience like? Okay, what's the experience like working for you?
Right.
That kind of thing. And if they feel like that experience is there, you can create a culture. Your culture is driven. That's what's going to keep people there. But also, what compensation type plans are you doing different than the next guy? And I know we discussed one that kind of I mentioned it's a big word, but we call it non-qualified deferred compensation. And what you can actually do is you're leveraging a life insurance policy for that person in the fact that it grows dividends inside that policy. So it grows cash value. You own the policy as a business owner. But at that point in time, you're growing a nest egg, basically either a life insurance policy that a person can carry on for their family for generational money, wealth, that kind of thing. Or if they get to retirement age and they need some money to be able to pull out of that policy, they have that cash value to themselves. But you own that policy up until you're ready to turn it over to that employee. Now, once you turn that policy over to that employee, the cash value inside of that policy is a write-offable expense because that asset was gifted to that employee. So those are ways that you can leverage a life insurance because the life insurance does have a piece that can be grown inside of it depending on what type of policy it is. But also you can handcuff that employee and say, hey, I'm doing something a little different for you. You know, I can single out you because you're a good employee to me. I don't have to do it for all my employees because we talked about that 401ks, your SEPs, your simples. There's a percentage as a business owner that you have to put into each employee if you want those plans.
Right.
What if you got one guy that, hey, if I lost him tomorrow, man, he's going to cost me a lot of money. So how do I do something different from him? But I don't want to just have to do it for all, because I can't afford to do it for all. But I can definitely take care of him, and this is a way that you can do it and grow money inside of something, and then also get a legacy to take on. That I gave 20 years to this company, now I'm taking this policy on. And let's just say it's $500,000 worth of death benefit. If they didn't touch the policy, their family is going to get that at non-taxable event. So they're leaving that legacy to their family for the hard work they did, on top of maybe their other investments. But also it has a cash component that if they get to retirement age and they need that money, they can get access to it to live on, to have another step in retirement income.
So I've got several questions to go with that. Number one, you said you can write off the value. You mean the value of the policy. So if it's a $500,000 policy, can you write up to $500,000?
No, it's the cash value that's accrued inside the policy.
Got it. Explain that a little bit more.
Okay, so
like you're telling it to a monkey.
Yeah. Okay. So you got to think, and this is how our products work. But you're putting cash into a policy. You have a death benefit that's associated with it. But the cash value that's growing inside of the cash bucket is an asset for you. Because if that employee left, you own the policy, you would take that cash back, right? And let's just say that it grows to $200,000 into that, right? Mm-hmm. You could take that $200,000 at any point in time and cancel that policy and put it right back in your pocket because you own it. All right. Now, when you take that cash value, cash as an asset, and you move it to that employee, you've now taken that $200,000 out of your company, and given it to them. So now that's a write-offable expense because that money has moved from your ownership to their ownership. Not the death benefit, but the cash actually accrued inside of it.
Uh-oh. We're almost saying the sound. Okay. Got feedback. Oh, said it sounds great. Okay, Ron. Ron, everything good? Give me a thumbs up, Ron. How we sounding?
Is it on our QC department?
Yeah.
Oh, the control guy.
All right, he says we sound great. I'm sure. Hopefully the sound's going well here. Ron. Okay, so earlier you said you set up like a company policy for when you transfer. So you could say you pick 20 years, let's say 10 years. Yeah. You can say 20 seems a little long to me. You can say to this lead tech or this key man, you could say, I'm going to transfer this policy 10 years from this date, right? So once you've earned the policy, I transfer it to you. And that's a huge benefit for somebody on our level who probably would not be able to afford an insurance policy on their own.
Right. Right.
So that's a huge incentive.
And then also, as far as the death benefit goes, I mean, I work with a lot of employees that are business people that still will say, hey, I care about your family too. Even if if something happened to you while you're working and I have this insurance policy, and let's say it's a $500,000 policy and it pays me 500,000, guess what? I'm still gonna write 200,000 of it to your beneficiary, to your family, just
Right,
because
of
I
course.
care about you. But that doesn't mean that you have to. But I'm just saying a lot of those conversations, it's all about what you want to do at that point with your employee. But again, not having anything in writing, there's no guarantee that they would actually write that check to that person, to their beneficiary. But again, it's a way that you can grow cash, something that you can single out that employee and you can give them that policy. At some point in time, that cash value now is theirs. They can take it, they can keep it, they can keep the death benefit, they can do different things with it, not just, walk away from the business and have nothing.
Right.
Well, it's just a way too that you're sitting down with your key guy and showing him that, hey man, I care about you and your family. Like, hey, I appreciate what you do every day. Of course, my appreciation only goes so far.
Right.
You can tell a guy every day how much you appreciate him, and you hand him that picture, you tell him how much you appreciate him. But at the end of the day, some days he's gonna get in the truck and go, does Trevor really appreciate me? Like he tells me that. It's more of a habit. So when you sit down with guys and have that conversation with them, like I got one, I won't use any names, but one of my bigger clients, he jumped in with me very early in my career, probably about 8 years in my career, and I've been doing this now about 8 years. He sat down with me and what was then my agency manager at the time, and he owns a construction company. It was a great company, and his company was on the way up. And over the course of the past 7 years, it's grown astronomically. Since then, he's going to bring in a guy that he's a middle-aged dude, tons of knowledge in that area. So he's able to bring him in and kind of be, hey, you're going to be my guy. You're going to help me get jobs, do this, do that. And he basically got a good salary, does all the things for him. Tells him all the time he appreciates him. But me and Jeff Bowes sat down with him, and we were just going over his review, reviewing his stuff, how do I do with you? And Jeff brought that up to him. He goes, wait a minute, back up. Talk to him about that. Now, he's putting a substantial amount in monthly to go this month. And the employee told me himself, as we're writing an application, he just could not believe what his employer was doing for him. He was like, that's crazy.
Yeah.
It's unbelievable that he would do that he would sacrifice that monthly out of his business on top of what he already pays me. So it just builds that much more of a culture,
Yeah. So we talked about that before that we started recording. The standards have changed for employers. We no longer have to provide them with just a paycheck and a job, 9 to 5, right? The standards have been Steve Jobs, right? Google. These guys have raised standards. If you don't have ping pong tables in the lobby, you don't stand a chance. And so, business owners, especially at our level, right? How can we even possibly afford to keep up with these people? We're losing people to insurance agencies, and we're losing people to real estate, and
Yeah, it seems like everybody wants to be a real estate agent.
well, not now. They don't.
Want to flip houses,
Yeah.
Even on my side, I'm losing secretaries at this point now to credit unions. Dude, I don't have a whole lot to offer a secretary.
Yeah,
they really don't.
Right.
They're extremely valuable to me, but I can't do so much for them.
So how do you not live into being a stepping stone for people?
Right.
Because if you're a stepping stone for people, you better have a training office in the back
100%.
because you're going to be going through people nonstop. Yeah, it's exhausting. It's exhausting trying to. So if I hire a bottom level gutter cleaner to come work at my company, Clean Image, how long can I truly expect to keep that person? Hopefully they're like 19, 23 years old, something like that.
Yeah.
And I can get a couple good years out of them. But you don't want to clean gutters the rest of your life, right? So how do you set the standard where all of a sudden gutter cleaning is profitable, valuable enough for you and for him, and you raise the standards so he's got an environment where he loves coming to work, but he's, man, I just can't do this all the time. So, right, we raise our prices. That's step one. If you haven't raised your prices this year, do it now. If you're a client in Clean Image, we bring the value. Don't overthink it.
Customer service is next level.
Yeah, right. It is. But so we talk about customer journey all the time. What's the customer journey? What's it like when they call in? What's it like when they get the estimate and we go through the process when we show up? Is it polished? What we don't talk about is the employee journey.
That's right.
Nobody in the blue collar world, it's hike up your skirt, tighten your boots, let's get to work, right?
Right.
That's gonna change or you're not gonna have employees.
Right.
So we're constantly asking ourselves, how can we be better? How can we, I mean, you go into the shop, that doesn't look like a pressure washing shop. That's a place where you can come have conferences, right?
That's right.
Where every week we're trying to improve it, trying to make it better, trying to make it a place that somebody would be proud of. New trucks, wraps, the brand. You've got to constantly be thinking about these things in the bottom level of the industry, right? Because it's not just the IT guys in California anymore. It's all the way down here with plumbers and HVAC guys. These guys want a career. They want to be here for a long time. So how do you do that? How do you incentivize them? That's how this conversation started for me. And so,
also, what stops them spinning off and doing their own? You know what I mean?
Right.
During COVID, I mean, there was a lot of people that went out on their own that started small businesses outside of their houses, and that was their time to finally do that because they couldn't get out.
That's exactly right.
And so if you look at actually business in America, the top businesses actually slowed down, but the small business realm picked up.
Let's get it.
But again, that's the same thing is again saying that there's more competition. I mean, at the end of the day, what stops a guy going on his own and just doing it day-to-day operations all the time?
Right. Why
does he want to be part of something bigger? And so those are the kinds of things you got to think about. Again, going back to key man stuff, if that guy leaves you, you have the cash value, you own it, you cash it back out, use that money to go recruit.
Right. If he doesn't stick around.
Right. So if he doesn't stick around, you haven't given him the policy, you still own the cash in it. You've only done nothing but invest that money in a sense. And then if they do leave you, now you go get that money and you go find another employee.
Well, it's just the reason why we, on the sales side, we call full-life policies our option policies, because there's always an option, whether it's for you, whether it's for whoever. You always have an option, no matter what. Your money you're putting into it, there's a way you can use that policy. So that's why I like anytime you talk about it. I do talk a lot about whole life to you, and I know that. I love. I mean, I do. I have tons of current and whole life, but at the end of the day, for your self-employed, your 1099 guys, that is their guaranteed. That's the only guaranteed investment there is in my mind out there. I mean, I don't want to misspeak. I'm sure there's something else out there, but in my mind, there's nothing else you put your money into that's going to perform quite like a whole life product does. I mean, if there is, I'm looking at it.
Yeah, for sure.
So
two things that are super practical, and it's the part of the conversation I know you hate. Well, what's it going to cost me, right? So that how do you get to that? How do you assess it? Like, let's say I've got 2 key men that I want to discuss right now. How would that process start?
Would be just kind of what does that value look like to you as a company? If you lost that guy today, how much revenue would you lose? How much?
In 1 year, 2 years, what?
Within however many, 2 to 3,
even instant.
How long would it take to replace them?
Regroup. Think about that journey. As a business owner, have you put a number on your employee and say, if I lost him, what amount of money would walk out the door because of A, his relationships with my clients, B, his, culture buy-in, anything,
Right.
Whatever you want to say, what would walk out the door? How much revenue would I lose from that perspective?
Well, you still probably your
and what would it take to replace that?
right.
And even find a similar employee. You got signing bonuses. You got to be able to. Hey, if you sign with me, you're recruiting from other employees. What does that look like? Putting down it on paper is one thing. And then once you have that number, then that's where you put the value on it. We can't come up with that number because it's going to be different for you from the next guy, the next business.
If it's a $20 million IT company, the guy that you go to every day for the information is probably going to be super valuable.
Right.
But the guy running your shop is probably.
Well, usually it's your longest tenured employee who you had the longest is usually the one that's making you the most money.
Right.
For a couple
now to be clear, we're talking about if the benefit does not transfer to the employee because he stayed the whole time
Correct.
for the whole term. This is if you're insuring your loss as an employer, right? And you're going to get this money because something happened here, right? So there's two scenarios playing out here. Hopefully that person sticks around, earns his or her keep, and then you can transfer that policy over and feel like you've done an amazing thing for your employee, and you have. So that's what we all want, right? First of all, let me go into this before we continue. It's called the McDonald's philosophy. So if you have somebody that you consider irreplaceable, then you have a problem. Period. End of discussion. You don't want them to know that. You need to fix that problem effective immediately, right? So the McDonald's philosophy is that everybody is replaceable, and you can train a monkey to take over that position within a certain amount of time. So training, coaching, all of those things are imperative in order to get rid of that necessity behind a certain employee. So you want to be extremely intentional about that. If you have somebody you feel like if something happened to that person tomorrow and it would hurt your business in a big way, you need to dive into that a little bit deeper and try and fix that.
We talked about that too at a recent conference we had, just around our recruiting. I mean, at the end of the day, you always got to have the next guy in line. It's just like football. I mean,
no hard feelings.
Yeah, you always got to have that next guy. Like when this guy finally gets and hangs his boots up, who's going to take the next role? Who's going to be that next guy coming in? Especially in college football, look at their recruiting classes. Now they have they have all these other areas to recruit from. So
our quarterback, see ya.
Exactly.
Threaten me.
I got another
hit the road. I mean, they got to recruit your guys, high school guys, and other college guys. I mean, it's just constant recruiting. So that's very true.
So you got to build out those systems, the recruiting, the sales funnels for not just your sales in the field, but your employees. This is a big thing we're seeing in the home service industry right now is employee funnels. Like you can't just put an ad out in Indeed and look at $500 worth of leads, which is probably like 50 employees, and then just pick one and you got lucky. It's not like that. You gotta market to these people. If the one that you want out of that 50, you better be marketing to that person. You better have the brand. You better have the process. It better feel flawless. And I'll be dead honest with you, our process is not. So this is top priority. We're trying to hire 2 sales territory managers right now, and probably 1 more lead tech. And so it's like, how am I going to recruit a top-notch, multi-million-dollar sales rep to a pressure washing company that I'm not constantly branding and marketing to, right? So it's very difficult. You just have to do it one-on-one or build those systems out. But we're going way off topic here. So the other question I had, you said the cash out, and I know certain policies mature at a certain level. Let's say 10 years go by, I transfer the policy to the key man, and he decides he wants to cash out. Let's walk me through that.
You would just call our agent basically and say, "Hey, I want to take the cash value out of this policy and surrender it," is what we call it. And then ultimately, we would ask him how he wants that paid out. Does he want lump sum? Does he want it like an annuity where we're going to pay him for so many years back? With a death benefit, even on the annuity side. So it becomes kind of just like when you leave a company and you have a pension plan. You got payout different directions you can go. So it really there's no surrender charges at that point. I mean, at that they can do whatever they need to do at that point in time.
Okay, let's say they quit on year 8.
You still own the policy,
even though they're gone. You can keep the policy.
You can keep it on if you want to.
You want to keep paying.
Yeah.
You own the policy.
So
all they are is the insured on the policy.
So
your business owns the policy. So
that's super confusing to me. So what happens if they die 6 years later after they quit?
Then ultimately it would pay out to you because you're still the owner and beneficiary.
I'm buying. I want a policy on both of y'all.
No, we can't do that because we don't have insurable interest.
That's
You
right.
did when that boy worked.
That's right. Yeah. When at the time of
I'll put you on paper. Right?
I'm talking here. Hold on.
You're gonna die tomorrow.
Jeez. Hold on. That's going to be cropped out.
So that's some mafioso stuff there, buddy. Yeah, don't if someone's with their last name.
Now, on the underwriting side is very you're not just going to apply for this policy and like our underwriting team is just going to, yeah, sure, we'll give them a $2 million policy.
They do their research,
right? I mean, it's going to have to be okay. This is Trevor's key guy. He's been with him X amount of time. How much is his salary? We have to tell him how much his salary is. What do he feel like he brings to the table? What
Okay.
How much of a value
that makes more sense now.
You can write on the secretary at your front desk, even though nothing against secretaries. Again, they are very key to his businesses, but he's got to be somebody that has there's value behind that, and the company would suffer from it.
If she's your office manager, and she keeps your QuickBooks, and she does your payroll, and she does your, yes, there we go. You're gonna get a $2 million policy on it? Probably not,
right?
But you would be able to an owner. So there's to go in with it. I mean, it has to make sense. Yeah.
So again, they quit on year 6, die 7 years later. You as the business, not the business owner, the business pulls out that policy or what's it called?
Still has the policy.
You're saying
they die.
That
benefit would be paid to the business.
Tax free, no matter what the death benefit is.
And you can do what you want with that.
You're going to call me and you're going to say, "Hey, John passed away. I need to file this." No big deal.
If you're getting excited, you're a bad person.
Yeah.
Stop it.
I mean, I'm going to ask, okay, well, let's just put it together. You're a beneficiary of the policy, so I'll have a packet together for you. But you're going to have to, of course, you're going to have to bring me a death certificate. So there's the key too. I mean, you own the policy, you bring me a death certificate. Well, I can't technically pay. We can't pay a death claim out to you. So you're going to have to. That guy can't just run away and move to California. You have no idea how to get in touch with him again.
Right.
There has to be some ties still there. You're still going to have to get a death certificate.
Because the insurance company's going to do whatever they can to not pay.
Well, no. They got from a legality standpoint. Yeah, right. They're checking all the boxes. That's right.
So from a business owner standpoint, have you ever heard of maybe like a tiered program? So if you're here for 5 years, can you, or would it be like a contract maybe? I agree to give you half the benefit if you're here for 5 years, 75% of the benefit if you're here for 7 years, 100% at 10 years. Is that something that
beneficiary? So you own the policy, you're the beneficiary on it, right?
So that would just be an agreement between
you would 50-50 split the beneficiary every year. You would go into that policy and do that. Or you can write an agreement.
So you can actually put them on the policy as
whomever they want as their beneficiary percentage, or you can write an agreement with them and say, I'm going to let you sign this. We have it in writing that if something happened to you, this death benefit 50% is going to your wife.
Yeah. That way, I don't want to pigeonhole anybody, right? It's not, you don't want to say, "Oh yeah, you're 9 years in. Sorry, dude, it didn't work out."
Well, once again, you're building even more relationship with your employee at that point, because you say, "Hey, man, I tell you what, if you stay with me for 5 years, at that point, I'm 100% beneficiary on this policy at that point. But you stay with me 5 years, I tell you what, I'm gonna throw your wife in there as a 25% of that death claim as a beneficiary. So this is going to get 75. She's going to get 25 of that. So it only pay out if she passes away.
Some people might not choose their wife.
100%.
What if they choose a different woman? How does that work?
You're getting too much in the weeds.
Good answer.
Yeah, it is too much in the weeds.
What can we get away with here today?
Let's stay out of the weeds.
At the end of the day, the main thing is always have legal backing. Right.
Good answer. Good answer.
Have it in writing. Have it both signed by you and your employees, so y'all both agree upon whatever the standards are. At the end of the day.
Yeah. So my fallback, I always want to have everything perfectly lined up before I make decisions. That technically doesn't have to be the case here. I could figure out the agreement between me and my key man 6 months from now. Let's just get it started, right?
And then I'm one phone call away anytime you want to make a change. Like literally, that's not a sales thing. That's like, hey, you decide 6 months down the road, you know what, guy, I was thinking we want to change the beneficiary. I want to stay here and I want to add this person. Well, then 6 months later, you know what, actually, I want to throw his kid on there. It's not a problem. As long as there's beneficiary stuff.
Well, back into that though, the other side of that is insurance. You don't just get a policy. Not everybody can just get life insurance.
Right.
Okay. So there is an insurability part to it. You got to go through the process. and that's applying first. None of this matters if he can't get insurance on that employee. He might have a health related issue
Right.
that you're not aware of, but because of HIPAA, we don't even know about it. But once they go through the policy process, they find out about it. They can't get insurance. This conversation doesn't even happen at that point.
It can even be legal things. I mean, if they've had any kind of history of legal problems,
Right.
Drug and alcohol problems, health problems, there's driving problems. Like there's a lot of things to go into. It has to be pretty extreme. Yeah, I mean, there's a lot of things to go in on the underwriting side. That's right. Yeah, just because you want the policy,
Got it.
I mean, the person is going to qualify for that policy.
Right.
That, and again, insurable interest there. We got to make sure that, hey, you're not writing a policy on some guy that's walking down the street. He actually is a true employee of your company. He is a key asset. You could just hire the next guy and you could walk in and do exactly what he's doing.
Mhm.
There is going to be some downtime. There is going to be some loss there from a company standpoint until you can get the next guy in that part. So those processes are through, insurability, and we have to, you have to find out if that can be done before you can just say, hey, I'm going to put a policy on you. Do you like this concept? No, it's let's see if we can get the policy first, and this is my thought process, and this is what I want to do for you.
Mhm.
And we're going to go down the road and see if it is an option. If it is, and here's how it would work. And then we get the legality documents in place too to make sure that we're checking our boxes and checking their boxes.
So it's the question you probably hate most, but just to give us an idea of what let's say it's a $500,000 payout. I'm sure I'm saying that wrong.
Death benefit.
Death benefit. There you go. Yep. Whole life death benefits, $500,000 from a key man. What are we looking at?
It's going to go off age, tobacco, is he?
Health.
Don't give me the political answer.
That's the only answer. Yeah. I mean, it's just
a range. We get a range, an extreme high cost and an extreme low cost.
Well, I'll give you an example. So the one group came to us and basically said, hey, I want X amount in cash value at X year. Okay, can you build me a policy? Let's back into that. And it was actually, their salary maybe times 2, right? Or it was, their salary only, right? So that in that policy, to get that money, it's growing dividends. You're not going to put that full salary into that policy over that period of time. So I've had people back into it. Hey, I want the cash value to be X, and if the death benefit makes sense at that rate, get that money up to that amount, then ultimately that's covering my business at that point, and it makes sense. And then on the other side of that is just going down the journey of how much would it take to replace that employee? Does that cover all my expenses?
Right.
So really it's about which direction you want to go. You want this to be more of a, hey, I'm going to give you this as a severance and I want X amount in it, or do I want to make sure my business is covered first and whatever cash value that accrues in there, then we go down that. So you back into which direction you want to go there. And then again, to this point, we can't give you a number around
So about $200 a month.
So
I mean, I would say it's depending on age. I mean, I'm trying to think back to some of my policies.
Well, think about this: if you're going to put $200,000 in it because this guy makes $100,000 a year, it's going to take you a long time in monthly premium, basically, to pay that guy $200,000 in 20 years.
I'm doing the math.
So anywhere from $600 or $700 up on up.
Okay.
Depending on.
All right, that's something we can build off of.
Yeah, I mean, you're not going to put any type of whole life policy that's worse. I mean, let's just say 50,000, 100,000. I mean, you start getting up 250, 500. It's your average male. I mean, you're going to be a minimum $500, $600, $700 a month.
I mean that's not a crazy amount of money. We break it down into weekly salary. That's like a 15% increase in pay.
Well, before we got on here, we
not,
looked at $1,200 a month. Let's just say you do that. That's $300 a week. That guy is a lot of times taking off your table is way more than $300.
Right. So there's a lot of talk and a lot of buzz about performance pay in the home service industry right now, and we're moving to a performance pay model right now. We're working on it. And basically is to incentivize the rock stars and eliminate the weakest links. That's the
Well,
best,
eliminate the guys you go get anybody to do
the
that.
guys that are riding the clock, milking the clock, taking their time, going to the gas station in between every single job instead of being prepared the morning before,
Mhm.
or basically it tracks downtime, it tracks production rates, and the guys that are really good and efficient and care about your business and actually live that out, they're going to make a lot of money.
Yeah.
So you could take this same model and say, okay, once you get to a certain level on performance pay, options step in. Because let's just face it, most lower level employees, even your best guys, are not great financial minds.
Yeah.
Business owners, me, for sure. I am not by any means a financial person. I'm a numbers person, but usually the numbers get me in trouble. So
But
because I'm a dreamer, I'm like, let's go. We're all in.
Yeah.
But if you offered this to your employees and only your rock stars, I mean, that would be a huge incentive. All of a sudden, you are the one that these people want to work for, even if it is cleaning out gutters.
Well, you're setting the kind of culture. Not
Right.
only I want to go work there, but then you're showing in that part of that culture why you go work there.
Right.
This guy's going to tell you he appreciates you, and he's also going to show you.
Right. We're going to take care of your family.
That's right. Yeah, it's bingo. Yeah, because every man walks into work every day thinking about his family.
Right.
Every decent human being.
And most, like I was saying, the point I was trying to make, most low-level technicians do not know how to manage money efficiently enough to secure a whole life policy on their own.
Right. Absolutely not.
It's just the truth. Business owners are the same because we get paid last. That's all there is to it.
Yep.
And honestly, when we talked about this last time we were here, I didn't even know how much I was paying you or which account it was coming out of.
Not a clue.
I had no idea.
Yep.
And there's some freedom in that because it's just in the back of my mind, it's just taken care of. And my family's safe and I don't have to think about it. And the cost was low enough to where it
Well, it's one of those
wasn't
things.
even a decision.
I walk away a lot of times after sitting down with someone and I say, hey, basically what we want to do is we want to be at a number and we want to be at a policy to where you're able to set it and forget it.
Yeah.
We're going to set it up in draft and we're going to forget it because at the end of the day, it's just enough to where it hurts, yet it's not cutting into your daily operations.
Right.
So that's where we'll sit down and really try to custom make it for everybody because everybody's different. Every single person is different. Everybody listens. We're all different.
Right.
So that's.
And there's some employees that employers that do strictly terminal key employees.
That's right.
And really it's just about covering their business. They're not actually growing it, but it makes that employee feel special because, hey, you're this valuable to our company that we need to get some.
Yeah, let's talk about that because that's way more affordable. So what you would make them the immediate beneficiary, right? Their child or their.
Well, so you can still do a key man where you're the owner and the beneficiary while they're working there. But a lot of people will structure those term policies that you bought it when you're 20 something years old and it costed X amount. We got it for you. You give me 10 years. It might be a 20 or 30-year term. That means you lock yourself into those premiums at a young age when you couldn't afford it. But now when you're in your 30s, you're a little bit financially more stable. You got more money to spend. We're going to give you this policy at 30 years of age. And you can continue it on if you want to keep the insurance for your family. So there's options there. You can run all kinds of scenarios to leverage it. But, I mean, the main thing is if it's a key employee policy, it's really about ensuring your insurability for that employee if something happened to them. Now, the way you want to approach how you discuss that with your employee while you're doing it, you can come up with the lies like, hey, I'll do this for you and continue. I'll give you this policy and continue to pay you, and all you're doing is pay for it if you want to, because you gave me 2 years of service, and I'll continue to pay for it. But now you're the owner of the policy. But at least for the first 10 years, I'm going to be the owner because if I lost you and I want some dedication from you, but in 10 years, I'll get you the policy if it's a term policy,
right,
and continue to pay. Now you get the beneficiary.
Right, and again, you can hear that as well.
Well, and here's another that you can go get a little bit of weeds on that. So go in all term on that key person. Maybe they're just starting to give you what you need out of them. Maybe start out with a policy 2 years down the road, you lock them in at a healthy rate, you get that cheaper term rate. But then you get a couple years down the road, and you start going, man, this guy's the real deal. Like, I wish I had permanent on it. Guess what? You have term now. You're going to call me up and say, hey, man, then we have a convertibility option in this term. Okay, absolutely. I would like to get some permanent insurance. Let's go on some whole life. Yeah, no big deal. How much you want?
Right.
And how much you want to spend on it. At that point,
I get what you need.
that's right. We'll take X amount of that term, and we're going to convert it over the whole life. No more medical, no more health questions, no anything. So basically, you locked it in early on that employee to where you give yourself options down the road for that. So, and then that leads right back into that long-term plan that we started with at the beginning of writing this huge policy on this guy, letting it build cash, sign it over to him one day. Well, then down the road, you're going, okay, we wasn't there 2 years ago, but now we are. So now this is what we're going to put in place, and over time, we're going to do this with it and that with it. So you don't have to go all in.
Yeah.
You know, you can start up in every business. You start up, you got to grow. We can do the same thing on your business planning side, on the life side as well. You can structure it here and still get to it.
And I want to say, though, our policies are structured that way. We can't speak for every insurance
Right.
policy out there. We're speaking based on what our policies and how they function, and how we talk to business owners, and how we help leverage our product in their business. And that's what we do. But again, I'm not sure what other people would say and how they would do this. This is just us talking, ways to leverage it. But again, people aren't structured the same way.
That's
So
true.
just know that you can call your insurance, if it's another insurance and say, hey, I got this policy, can I do this? Well, we don't know, because I can't speak for the other people's product.
So I've been to dozens of conventions, coaches, training, and all these things, trying to learn more about how to run my business. I've never, ever heard anybody talk about this kind of policy in any. Why do you think that is? Why is nobody talking about this? It seems like such an easy, low entry incentive for a lead person in your company. Why is this not?
My opinion, because you're going to, the people you're surrounding yourself with at those are just like you. All you're thinking about is what can I do every single morning I wake up to make that business grow more. So you're trying to keep money from going out. You're trying to keep money coming in. Well, yes, we're kind of coming in and saying, hey, you got to give us some money to get to here. So a lot of times, I think a lot of business owners it's not talked about. And two, all business owners are insurance to death. I mean, you have to have liability policies and commercial, all that. So I think most blue collar business owners, when they hear the word insurance, it's like, oh man, I'm insurance pool. How many times I hear that? No, I'm insurance pool already. And I understand. So I think it's the fact that you guys we all are wired. How much can we grow our business, not how much we have going out. We don't want to think about money going out. We want to think about it coming in.
Right.
So that's what
it never makes it on the expense chart, right?
Right.
You look at that, you look at your budget once a year, your marketing spend, your labor, your COGS, cost of goods, and the last thing you want to do is line item one more thing to try and figure out where's that money going to come from. But let's just talk about percentage of revenue and what you get out of it. And what I mean by that is, what is this key man policy? What percentage of the total revenue does that represent? As a business owner, I'm looking at that going, okay, so that's less than 0.5%, right? 0.05%. That's what I want to say. That's most likely 0.05% of your total revenue. So if you can't find 0.05% somewhere, raise your prices 0.05%.
Right.
Problem solved. Right. And you have to do that, right? It is an incremental thing running businesses, right? You have to plan and track and make sure you're on point. So there's no reason why you can't find. I guess what I'm thinking, what I really want to know is this like a big business secret? Is this something that big businesses do that we just?
I'll tell you this. I mean, a lot of our key man insurance policies. I mean, we see at banks. I mean, CEOs, CFOs, all C-level guys will have some sort of key man policy to that business. I met with hospital systems that they're doing it on 10 of their key employees of the hospital. They're all C-level type people. I mean, there's a lot of that going on in bigger business or bigger box, because they're thinking outside the box faster than us. And again, you can go to every conference out there, but again, everybody talks about war on talent, but nobody talks about how to fix the war on talent. Like, how do you?
Everybody tells you how to make money. They don't tell you how to keep money.
Yeah.
Everybody tells you how to build a brand and build a business, but they don't tell you how to keep your employees.
Right.
It's the exact same problem.
Is that outrun your waste, basically?
Exactly. And if you don't have those systems down in writing, I talk about that on almost every video I make because I love systems. If you don't have that system in place, like I promise you, I'm going to be mapping this out over the next month or so, and I'll be calling you because I have one person in mind right out of the gate that I would love to do something with.
Yep.
But again, even talking to that point, just the same concept we talked about, even from a business perspective. Okay, we talked about your employees' journey. What about your journey? Where does your business go? Your key,
That's where the
success.
next.
Yeah, you're the key success to your business. What happens if something happened to you? You know, does the business continue on? What does that continuation plan look like for you? What does tomorrow look if you're not here today? You know, the kind of thing. And how does that lead to your family? And how does it lead into your families that you have working for you?
Right.
How does that impact them? And on the ripple effect that would happen if something did happen to you, you know, that kind of thing. So again, going back to what we talked about, what is day, 65, you're 65 years old, you're turning lights off, you're leaving that business that day. What does that look like? Is that selling the business? Is that your children are taking on the business? Is it you have a business partner, his family's taking on? What does that continuation look like, and how does it impact those employees? And where do you create a journey from there too? Again, we talk about the employee journey, what about your journey kind of thing as a business owner. Nobody thinks about those things because I want to make all I care about. I got to feed my family.
Yeah, our exit strategies are how do I sell this business? Everybody in this industry right now is talking about, okay, I want to build a scalable business that I can sell. Profit is king. Profit is for sanity.
How does it look on paper?
Yeah, profits for sanity and revenues for vanity. That's how it goes. So we're changing the way we look at grassroots businesses rapidly because of people like Tommy Mello who wrote Elevate. We're trying to build an actual career path for the people on the bottom.
Yep.
Why can't you be a lead tech of a pressure washing company and build wealth and support your family? I think it is possible, but you have to have these things planned out, right?
Well, that's kind of piggybacking off what you were saying here. That is usually our way in to business owners on the sales side. Is we're going to meet this guy and find out the business. We immediately have the question, oh, so what's your business continuation plan? Deer in headlights.
Yeah.
I would say very high percentage of the time it's always like,
my wife would run it and it'll continue on, she'll make money.
What are you going to do if you die? What does your family do if you die?
A lot of guys, unless going back, a lot of your corporations, they have that business continuation plan, but your mom and pops, your blue collar guys.
I think I would call it an exit strategy.
100% exit strategy.
Yeah, I think
our way in is what's the business continuation, and yes, we do that.
If your exit strategy is to die and you don't care anymore,
That's right.
then
Do you want to build generational wealth for your kids?
Right.
You want your wife to be taken care of, what you focus on your kids.
Yeah, what's most important?
That's right.
What's the important piece of this building this business? What are you doing it for?
But that's always usually our that's how we kick the door in. Like business continuation. And sometimes God loves to sit down and talk to you, or sometimes it's I'm not quite ready for that.
So let's just use me as an example because my exit strategy or business continuation plan is to build the largest franchise pressure washing company in the world. That's my plan. It's my big, hairy, audacity, whatever. I don't know, big hag. It's my big, audacious plan, right? And will I ever achieve that? I have no idea, but I'm fighting for it every day.
Yeah.
So that's my plan. Now, if I die 6 years from now and I don't get there, that's what you're talking about.
That's where we come into the what is.
Yeah, what do you do if that happens?
Yes. Our plan when we sit down with you is we want to try to we want to check off every one of those what ifs.
Right.
If we don't have a clear cut, not just an idea, okay, that's one of the biggest things. Like when I sit down and talk to somebody, it's always like, oh, well, I'm going to do this, I'm going to do that, I'm going to do this. Right? They always have a plan, always have an idea.
You got a plan B.
I have lots of ideas. Okay, I have tons of ideas. I have tons of plans. Everybody has some plans until they get kicked in the mouth.
That's right.
I mean, and then it's like, oh crap, what I do. So we try to check off those what ifs from a financial standpoint. And one of the easiest ways, you said it well, it's a very small percentage if you have to pay X amount of dollars for a financial part to make
Right.
sure that whatever that what if is able to work out. Well, if I can sacrifice that for the next 20 years or whatever it is, then if everything else works out, well, this is just gravy on top.
Right.
You know, I've got this in place, and hey, it's okay. Well, perfect.
So some of the questions we would ask to you would be, you know, what if you passed away today? Well, what do you think would happen? You know, would your wife own the business? Oh, it's you know, I'm answering these questions because we hear it every day.
Right.
So, well, you mentioned that you have a key employee, right? You have a guy that's the key to your success. You have that. Can that employee run your business? Oh, absolutely. You could probably take it, hit the ground running. Okay, let's talk about how do we incorporate him maybe in your succession plan. Now you're adding another value to keep him longer that he sees in the future as well. That says, hey, if he checks out, he's basically he's incorporating in his continuation plan. And so you can leverage things like that if you're a sole proprietor. Now, obviously, when there's two businesses in play, like two business owners in place, a lot of times that's just, hey, the other business owner needs to take care of the business and he will continue it on. But you're still got an asset there of your family. How do you take care of your family? But there's legal documentations that you can write up that will allow you to do these things, leave a business to your business partner or your key employee or entity as a whole, or if you have multiple partners, you can leave it to those partners. But you're also using or leveraging insurance in a sense to make sure that your family is taken care of from a financial side.
Mm-hmm.
Because again, going back to our conversation about Apple and the rest of those companies, you know, Apple, we talked about it with Steve Jobs stepped away at one point in time, it crashed, you know, and then when he came back, it back up. You're leaving your insurance into those guys, basically your business partner, if you have a partner, or you're leaving it into that guy that works for you, that key employee, to take care of your family because they're going to have to buy them out. You know, at the end of the day, you're the owner. Your asset will be your spouse at your demise, or whomever you're in, you know, that business to. And at that point in time, they have to ensure that the business can continue on, so they can still collect that check in the mailbox, right? So why not have something there that you know, hey, if I check out tomorrow, my wife and family is going to get what my value of my business is worth. My business can continue on day one just as I was there. And those employees that I need their family to have a place to come to work the next day.
Right.
So those are the succession plans you got to think about.
And then it goes to myself, partners, and then it goes like it could get you. Because every business structure is a little different. You got partnership. Well, we got to buy stuff when it comes in. Okay, at that point, if something's getting you on the business together, okay, well, when something happens to you, well, automatically I'm going to become business partner with your wife. Is that what we really want? And right, vice versa. You know, like, is that what our wife? Is that what me and you want? We want to be partners with each other's wives. You know, do we want? So that's where you can buy sell agreements, and you structure that in a way to where there's always a plan. So there's a check on it is basically what we try to do.
So I want to be as practical as I can for business owners. Practically, what does this look like, and how much of a pain is it going to be to institute it? You know, so I know from my experience with you that it's very practical. You come sit down, spend about an hour and a half with me.
Yep.
We mapped it out. We've got my policies written up. I don't have a key-man policy yet.
Yep.
So let's talk about the difference between and is it called a key-man policy?
Not on.
That's just like something that
Not on yourself, basically. So every scenario is different. So
Yeah.
his thing, if you are in business with a partner, a lot of times we're going to do what we call a cross purchase buy sell agreement. You got to get the agreement, the legal document written up, but the insurance there is to fund the buyout. Because at the end of the day, if you got a $2 million small business, let's just say, or $1 million small business, who has $500,000 for half of that business just sitting in their bank account ready to go if you were to pass away, or if I were to pass away?
Mm-hmm.
So those agreements change based on the dynamics of what the business structure is. You have to have
a partner?
No.
Okay.
So that would be a business partnership type scenario. There's all kinds of scenarios. There's people that 4 people own a business together, right? We would structure that totally different than a partnership type scenario.
Well, let's structure mine right now.
All right, so you're a sole owner of the business. There's nobody else that owns your business, right?
Mm-hmm.
I would recommend potentially if it fits right for you, and do you have a key man to your employee that you know that tomorrow could pick the business up and run with it?
It'd be my wife
You'd be your wife.
for sure, and she's actually the day to day.
So do you feel like your wife would be able to continue the success the way it's going or headed?
What do you want? Because the answer is yes. But but most cases, no. The answer is no for most.
Most cases, the husband is always, I'll do my wife. Yeah. Oh yeah, she'll be ready to step in, but I'm gonna tell you, the minute something happens, I'm thinking of myself here. Like, I mean, my wife's a rock star, but I'm telling you, like, something happens to me. First of all, she's going to be grieving. Then it's going to, oh God, we have 3 kids. Oh, yeah. Oh God, we have to do this. I got to make sure they get here, they get there. So that business is going to be like, okay, I don't know. I need that because it's what's paying us, it's bringing us in all the, it's what's giving us a lot to cash flow. It's keeping that standard of living going because now.
Yeah, the question really is, can she, but does she want to?
Right. Bingo. She's not going to want to.
She's not.
Yeah, a lot of percentage of the time, that wife's going to be like, I don't care. Can I just?
I say this all the time. Being married is like being in an airplane, and I think you probably heard me say that.
Yeah.
Being in an airplane, there's nothing wrong. It's beautiful. It's a perfect airplane. And then my wife sees me jump out the door, and she's like, "Where the heck is he going?" And then all of a sudden, she gets yanked out by the leg, and she's like tied to me. Right?
Yeah.
That's what it's like being married to an entrepreneur. So she might be running the day to day. She doesn't want to.
No,
she's tied to me as I'm falling out of it. I jump, she's falling.
She'd rather just be hanging out with the kids all day. So
yeah, for sure.
For sure. Absolutely.
So my question then would be is, okay, we got to that part. We know exactly now that let's take care of your business and get your wife in a situation where she has options, right? Today she only has one option. You check out today, she's still got to put food on the table. She's still got to run this business and try to keep it afloat and try to keep money coming in, the mailbox money. But not in your case, because you do have some life insurance there. But typically what we'll do is we'll insure that person for what their business is worth. Okay, if they checked out today, your family would get the stepped up basis at that point in time of what the business value, fair market value is at your demise, and you would ultimately have that amount of money in insurance, right? It's a tax-free benefit as well. The insurance settles the business value. With you, I would probably say, hey, let's leave it to a trust, and then that trust can administer whom you want to take the business on at that point in time. And the life insurance proceeds are to pay out yourself for that business. So there's the funds disconnect she's taken care of from a financial standpoint. And then on the other side, the business is taken care of with a new leader. The next day, that trust administered it. They can sign checks, they can do everything they need to do and continue the business on. And your employees have still a place to walk in the doors next day and continue the way you were, just as if you were here.
Mm-hmm.
But again, going back to that, if your wife is still in that business, you still have that plan without the insurance. Her insurance now is on that employee to run it just the way you are and continue to strive and pay her out. It would be a stock redemption type scenario where she slowly gets her shares, but say it tanks in 5 years. You can't get blood turn up. You're no business anymore. Sorry, you're not getting paid out. Or you got to step in and try to get it back to where it was.
Right.
So really, in business scenarios, it's better just to disconnect at that point. And how do you find it?
Right. Man, nobody wants to talk about death benefits, right? It's like the last, business owners or entrepreneurs, I should say, not necessarily business owners, because you can inherit a business and you're a business owner.
Yeah.
You can be like my wife, you can be a business owner, but she's not an entrepreneur. She doesn't, she didn't necessarily choose this life. Entrepreneurs choose this hell we live in, this purgatory that we constantly put ourselves through just to achieve a ridiculous goal that everybody else thinks is never going to happen, right? So you constantly stay positive, constantly reaffirm you're on the right path, and nobody's patting you on the back saying, keep it up, you're doing great, right? That's just the truth of it.
Usually you're having a pat on the back.
Right. So my point in saying all that is our mentality is very fragile as business owners. Most people don't realize that, but it is extremely fragile. So you've heard the term protect your peace, I'm sure, right? I take that to the next level. I mean, if we were good friends, you would know that, because the moment you start to get negative or anything, I will shut that down. Like I can't have it. My goals are too big. I cannot have negativity around me. I have to protect this dream of mine because if my dream's not big enough to fit the people that I'm bringing with me in, then how the heck am I gonna pull any of this off, right?
Yeah.
So this is the last conversation that I want to have, but it's extremely important. The good news is you guys are professionals and you know what you're doing. And if you find a trustworthy insurance salesman, I'm sure you hate that term. I hate being called a real estate salesman.
We're relationship builders, we're not sales.
Right. Solutions. We find solutions.
We fix problems.
Sales is really not, you don't sell a product. You solve people's problems and provide a solution. But I think if I was going to leave with anything, I would say take this conversation seriously. This is definitely the most under talked about topic in our industry for sure. In the home service industry, like I said, I've never heard a conversation about this. And honestly, the first conversation I had about life insurance in general, other than my best friend in high school trying to, he straight out of high school, had a license, and he was trying to sell me on, and I was like, I'm not making any money. I don't know what you're talking about. But other than that, it was you 2 years ago saying, hey man, you need to consider this. So take it seriously. Don't brush it under the rug. Things happen, and you want to make sure your family's taken care of. Is there anything that you guys want to end with? Maybe there's an insurance that we didn't cover. Maybe there's certain other things that business owners should be looking into as well.
Just have the conversation. Open the door, whether it's with me and Jeb or somebody else you trust. Just open the door, walk through the door, have the conversation with somebody. Because there's things that me and Trevor, had it not been for his review, there's things we actually talked about in his initial appointment. But he's talking about the same positive thing. I'll never forget sitting in the same area, different couch, but I was feeling scenarios of why he needs life insurance. And I remember him going, dude, oh my gosh, but I don't like talking about this. Can we just write the policies? Like, I'm just ready to put this behind me, And so over the course of the years, we've opened lots of doors, and here we are now. His interest is there. So open the doors, ask the questions. Because I guarantee, no matter how well put together you think you have it, there is somewhere where you can find where this is. So
I think the biggest thing is we don't. I was a business owner too. Like, no one ever told me about even a buy-sell agreement. I was in business with my dad. I just assumed my business would go to my dad. Here I'm married. Yeah, my wife would actually be in business with my dad. You talk about driving a wedge, in a situation that I feel like, hey, yeah, my dad's put his arm, sweating. But yeah, I want my wife to have her portion of it too, because there's some income that I had off of that business. So you don't think about those things, and you don't want to think about those things, because all we're thinking about is, how do I get that level as a business owner? But you don't think about the negativity. Like you said, it's not negative though. It's positive, because now you don't have to think about that stuff anymore, because you know your family's secure. You can focus on what matters now. And shining light in dark corners is what we like to say. Is like, hey, like, look, if you haven't looked under your desk in a while, go look under there and see what cobwebs are sitting there. This is some pieces that might be in your business that are cobwebs. And you don't really want to have to talk about them, but you got to. It's kind of the same thing in financial planning at home, even with your wife, on just what happened to your estate, getting a will, getting a trust, getting whatever your last minute documentation, just to have that plan in place. Because at the end of the day, I told you this: people spend more time on planning for vacation than financial planning themselves.
I believe,
and their last ride, basically. So if we don't at least put a little bit of effort into those things, they evolve all the time. They're not just like set it, forget it. You got to revisit them occasionally, but at the end of the day, just do it, because we've seen families, get split up, and the wedges that can be drawn just over some money, that kind of stuff, and just having those things in place is just more beneficial. And I will say, find you that's going to ask you questions and challenge you on the business side. Don't just get somebody that's going to sell you a policy just because you walk in the door and you say, hey, I need some life insurance. All right, well, we'll sell you $500,000. That's basically like me selling you a product without telling you why you need it, kind of thing, or filling a gap or a void.
You make them explain to you why they're sell you that coverage. You make sure you walk away understanding, I bought it not our policy because you're able to explain that. You're able to answer that question. So, for sure.
Okay, we went an hour and 15 minutes. Usually about 15 minutes. So we were worried about not having anything to talk about,
Probably
and we can keep going for sure.
For sure. Yep.
So I'm sure there are other things that we could be doing. Obviously, step one, have a conversation. If you guys want to get in touch with these two gentlemen, just hit me up. I'll get in touch with them. Send me a message, whatever, leave a comment. I'll make sure you get a hold of these guys. You can probably just Google them too, honestly. Farm Bureau, Gavin Collins, and Jeb Burke. That's it, guys.
Yeah, man.
I absolutely appreciate you being here.
It's fun. It's my first one. I enjoyed it.
Well, hopefully that. I'm a little nervous about the sound, so we're going to go back and listen because he was about 10:43. Sound is horrible, and then at 10:43 he said sounds great. So I don't know. Maybe it was just yeah.
We'll go with that.
Either way, thanks guys. I appreciate it. Through the noise, Trevor Steele. Peace.
Thanks, guys.